Hello, I'm Jared Hall. It's Monday, October 14th, 2024. Welcome to the week ahead. Recapping last week's market price action, the S&P 500 finished up 1.1% for the week, riding the back of strong earnings sentiment posted by some of the largest U.S. banks. Gains were also fueled by positive developments in the AI sector, as a supplier of graphics cards, which are used to power AI compute, stated that demand for their cards was strong. While banks and technology ended the week higher, interest rate sensitive sectors were the laggards as the markets adjusted to the likelihood that the Fed's rate cutting cycle will be slower than previously expected. The Fed and their target interest rate seems to be the thing that is directing the market most heavily in recent weeks, even as we close in on the final weeks up to the presidential election. After September's strong labor market data, the timing of how quickly the Federal Reserve will lower interest rates is being called into question. Remember that lower rates are used to create economic stimulus at the expense of perhaps some inflation, and that higher rates are used to slow inflation and also tend to slow the rate of economic growth. As of this Monday morning, the CME FedWatch tool, a reliable tool that we use that predicts the likelihood of Fed rate moves, shows an 84% probability for a 25 basis point rate cut in November. But as we look out through March of 2025, the probability of rates moving more than a full 1% below their current target has gone back to zero. This is a big change from the 30% likelihood that was priced in just a month ago. Moving on to what's impacting the market this week, we'll be watching corporate earnings releases. A swath of companies across various industries are set to report their third quarters this week, and economic data releases are actually few and far between. It is now becoming somewhat consensus that third quarter earnings should be strong enough to stave off recession talks. While fourth quarter GDP will be impacted by hurricanes Helene and Milton, it seems that the economy has enough gas in the tank to weather these higher interest rates we've seen in this cycle versus the essentially 0% interest rate environment that we saw in the last decade. That's all for this week. Thanks for watching. Be sure to follow along with us for more content like this.